All right, good morning, folks. Like I said, if you don't want to be recorded, go ahead and turn off your video and just use the chat. For everyone else, please have your video on. It really helps us feel like you're actually in the room. Um, anyway, thank you for so much for being on time. I'm Katie Brim. I'm one of the co-founders of Farmer Campus. This is Disaster Financial Recovery 101. Just a little background, Farmer Campus is an online learning platform for farmers and ranchers, and we're helping mostly farmers and ranchers, but also service professionals and anyone working in the food movement navigate unprecedented barriers to farming through multimedia education. We offer a variety of different courses in wildfire resilience, climate resilience, agroecology, all sorts of things, business resilience. And today we want to dig into the actual recovery around the financial side of farming, especially with the amount of natural disasters that are happening. I'll go into that in a little bit. A little bit of housekeeping really quickly. As you can see on the welcome slide, if you can change your name in Zoom so that we can see who you are. So put your name and your preferred pronouns if you would like, as well as your specialty. So if you're a service provider or you work for a nonprofit, it's helpful for us too to see that too. And if you're a farmer, that's like livestock or flowers, specialty crops, etc. Again, if you can leave your video on in a non-distracting location, it really helps us. I think we all have Zoom fatigue, and it really helps us actually be able to see that we have real people on the call because we're real people too. That makes it a little bit more engaging for everyone. Like I said, you can change your name in Zoom, and that way we'll know how to address you when you ask a question. Please be engaged. We know a lot about this topic, but we also really value the knowledge you're bringing into the space. So please speak up, share your knowledge, share resources, and ask questions throughout. You can use the chat. You can also raise your hand. For the most part, we'll save the Q&A for the end because Winona will be covering a lot of things today. But again, if it feels really relevant, go ahead and raise your hand and I will pause to call on you. I will be tracking all of your questions in the chat, so just know that we will get to them. So why financial recovery from disaster? I've asked myself the same thing. This is not what I got into doing this type of education for, but we have worked with farmers for the last 7 years between climate and wildfire resilience, and really seen that this topic was rated lowest by our farming community on something they'd actually want to learn about. But what we found was the people who have actually been impacted by disaster like wildfires rated this topic as one of the most important things that farmers and ranchers should know about, and that having your preparedness around recovery, which sounds a little bit counterintuitive, can really make or break whether or not you're able to recover when a disaster strikes. And at this point, it's really not just an if, it's really a when. We're seeing increasingly devastating wildfires. We had the flooding beginning of this year. It's just something to be thinking about, and really can mean the difference of you continuing to be able to do your livelihood. So that's a little heavy, but there's so many awesome programs out there these days, the forms of aid, and in order to access them, it's really important to think ahead and actually have your financial side of things of your operation in order so that you can actually be ready and you're able to respond efficiently and you have the right materials and you know how to apply. So that's what we're going to be covering today. We have a great speaker, Winona Doris, who I'll introduce in a second. So as I said, Winona will be going over the majority of the content. At the end, we will have a nice Q&A session. So just know that we'll have plenty of time to ask. I know I can see a couple of you on your call that I know who also work in this field. So please feel free to share your knowledge too. All right, without further ado, I would like to bring on Winona Doris. Winona is a business skills consultant and trainer who works with farmers, ranchers, and fisheries. She leads trainings on accounting, taxation, insurance, and cash flow at both the state and national level. Winona has led organizations of all sizes in developing teams, selecting and implementing accounting systems, managing corporation compliance, and preparing taxes. She comes to agriculture through familial ties from her great uncle, who not only expanded the family farm in Mississippi from 300 acres to over 1,000 acres, but also manually dug and operated the first Black-owned calf fish farm. The family lost and then recovered much of its farmland through a settlement of the Pigford class action lawsuit against the USDA. Winona holds a bachelor's in accounting, an MBA, and a graduate master's certificate in taxation. She is also a certified registered tax preparer and licensed insurance agent. And I have been lucky enough to work with Winona through a business resilience course through California Farm Link called the Resilierator, which if you haven't heard of it, check it out, of doing the nuances of getting your entire operation resilient. And I'm so glad there's someone like Winona out there who knows as much as she does about topics that I don't. So take it away, and go ahead and introduce yourself to Winona. Before they do that, for the folks that are on, if you could just unmute yourself and just say hello. You don't have to say anything else other than that.
Hello. Morning.
Morning.
Morning. All right, great. Go ahead, Winona, and thanks everyone for being here.
All right. Thank you, everyone. I always feel so uncomfortable when you introduce me. I hate talking about myself. Anyway, so welcome to Farm Financial Recovery 101. And I'm going to give you a lot of content here. And I know that we are recording, and I think we're making the slides available as well at the end. So if you can catch questions at the end or feel like you missed something, we can circle back, or you can always kind of circle back to the presentation. So our agenda for today, we've done introductions already, and we will do some conversation around just the cost of wildfires, not in actual dollars, but in this discussion, we're going to talk about the conceptual elements of the cost, like where you're going to be facing costs and what decisions you're going to need to make. Then we're going to talk about sort of your recovery scenarios, and I've identified 3 major ones. That does not mean that those are the only 3, but these are just sort of 3 big buckets where you probably will find yourself somewhere along this spectrum of deciding how you're going to recover. And then we'll do a lot of discussion around cash flow planning and assessment of your loss, and how to tie back into your scenarios, and as you move along that continuum, and what to do and where to go, how to get help, and then we'll do questions. So we'll just dig right in. All right, so who pays for the cost of wildfires? So more than likely, most people are wearing 2 hats as both a homeowner and a business owner when they're dealing with a disaster. And they're sort of broken down in these 4 areas of the types of things. Again, not an exhaustive list, but just to give you an idea, if you're a homeowner and there's the cost of prevention and mitigation, dealing with like equipment and like creating defensible space on your property, the cost of insurance. As a business owner, you have the cost of education and training and detection, enforcement, permits, inspections, more defensible space, insurance. So that kind of falls underneath that bucket. Then under this category of cross-cutting means that these types of expenses cut across various areas in your life and in your business. There's legal and civil liabilities, building codes and standards and regulations for both as a homeowner and a business owner. Then you have direct costs. As a homeowner, you're going to have possibly direct cost losses related to your structure and your infrastructure. And then you're going to have remediation and cleanup. You're going to also have those same things as a business owner, including the loss of timber and agricultural losses, but you're still also going to have those same structure and infrastructure losses and remediation and cleanup. Indirectly, as a homeowner, you're going to have evacuation costs, government services interruptions, i.e. What does it mean when there's a disaster and you have children, and now you've lost education for your children because now the schools are closed, or the public services are closed, which is quite common when there is a disaster. And then any sort of like housing market impact that is going to be on you and your family. You're going to have those same things indirectly on the business side, but maybe even on a larger scale where your business is relying on a lot of the government services and infrastructure. So you're going to be dealing with business interruption, tourism may be down, the supply chain may be completely wrecked because of a disaster, which will affect your business, the cost of evacuation, the economy gets hit, utilities go down, transportation is interrupted. All of these could very easily slide on the personal side as well. And then of course, just cutting through just every place where government or public services are interrupted, are things that you have to deal with as a business owner. In looking at the recovery, so as I said, I have sort of these three scenarios, not meaning that these are the only scenarios, but really people are kind of looking at three different options in recovery. So the first option is sort of a retreat and rebuild. And retreat means you've been forced out, you have to leave. The area is no longer habitable, and you have to find some sort of temporary or long-term housing. There's a complete upheaval of your life and your business, and you have to leave. So there's a cost associated with that. And we'll talk through what that means and how to make plans for that and how to pay for that. The second is sort of a managed retreat where you're not completely forced out. Maybe you move to a lower risk area, but there will be some access to some of your usual services, but not as extreme as the first. And then the third option is some sort of resilience where you don't have to move out. You're able to stay, but life is different, either drastically different in some areas and not different in other areas, or maybe through some of the plans that you've made, you're able to sort of gut it out. So one of these options, or somewhere on this continuum of options here, is where people usually find themselves. And in these scenarios, they're dealing with these questions around what is the disaster response plan? Where are you and your family going? And how long can you stay? What are the plans if you have a team that works with you? What happens to them? What if your team, your employees, are living in housing that you provide that's no longer habitable? Like, what happens? And do you have access to transportation? And how are you getting around? Do you need to get around? How do you feed yourself and your family and your team members? And what other resources will you no longer have access to? What if there are medical concerns? Maybe someone in your family or you yourself has medical concerns where you need to be able to get around and get to a doctor or to pick up medicines. How are you going to handle that? What's going to happen? Wildfires and are any other disasters, those are traumatic events, while you're also taking care of like the things, the sort of the basics of food and safety and shelter and stuff like that. What about the emotional support that you and your family members and your team needs? And it's really important. I put this in here because it is such an important thing to make sure that you take care of through these traumatic events. And then also, what if you have pets and livestock and other farm animals? Like, what happens to them, and what provisions are you making to make sure that you get them to safety and temporarily housed if you have to somewhere else? So depending on which scenario you choose, right? You may have resources that can sustain you for a long time. And sometimes you may think, I'm going to be on the resilience path, I'm going to stay here. And then that just doesn't work out, and you end up on the retreat, I have to leave path, right? So you sort of have to think through that when you're making your plans, and know that your options may change beyond your control, and you have to be able to respond. And one of the biggest factors in your ability to respond is financial planning is a critical factor here. And the more that you've prepared before the disaster, the better. And when I say prepared, that does not mean that you have to have a crystal ball and know exactly what you're going to do in every situation, because none of us have a crystal ball. And We don't always know what we're going to be faced with, but at least, after today's conversation, it will give you some things to think about and some other things that you can actually put down on paper to help you think through sort of some of the what ifs based on your particular business and home situations. And in addition to financial planning, you should also have a really good communication plan in place in terms of how are people going to get in touch with you and how are you going to get in touch with people, some sort of plan for accessing the help that could be available to you, having emergency supplies and evacuation plans. Okay, so let's dig right into cash flow planning and the financial assessment. So the first question, after a disaster and you're sitting with, okay, I've experienced this disaster, what am I going to do? Immediately, you're going to turn to the money side of the question, right? So step number one is to prepare or update a cash flow budget. So if you've not been keeping a cash flow budget for your business, you're going to have to do one for your business after the fact, right? Hopefully you've been doing one and then you can just have something you can update. So here's a sample of what one can look like, where you sort of have mapped out this plan of here's my cash that I have coming in. And this one looks really ugly. And I made it look ugly on purpose because I'm assuming that this is, after the catastrophe, the disaster has happened. And so maybe you start here where you're looking and start to ask your questions around, is there anything in this cash flow budget that I can change? What are the expenses that I can cut that I no longer need? Or some of my expenses I absolutely have to maintain? And then what happens to my income? You may find that after the disaster that your income significantly decreases. And so there's a reality to that and what it does to your cash flow. And you very likely could be facing a scenario that looks like this. Now, when you do this kind of scenario planning, I advise that you sort of take a worst case scenario approach, and that you prepare more than one. I wouldn't prepare too many because then the differences don't become material. But even if you had two, sort of a worst case scenario and a likely scenario. And then that way you can sit with it when it's not in the middle of the disaster. It's better to do this in advance when you're not like trying to deal with the trauma and all of the issues that you're faced with. When you do that, when things are sort of quiet and things are normal for you, and you can think through, what am I going to do if suddenly, there's a fire, either on my property or a fire that is affecting the community that's going to then affect my business. Like maybe a fire destroys the roads because the lines are burned down, all of these kinds of things that can affect your business. Better to do that in advance, to just sort of think through it and be more conservative than aggressive in your thinking. The other thing that you have to do is you have to do a personal cash flow, right? So ideally in your accounting, you don't have your personal finances entangled with your business finances, ideally. Sometimes you do. And if you do, then you would learn in the Resilierator that Katie was talking about, that we would teach you how to untangle them and why you need to do that. But then you also need to take a look also at your personal financial situation and what does that look like? Because as you're moving through dealing with the disaster, you also have to continue to figure out what's life going to look like for me on a personal level. What am I doing with my family? How am I feeding myself? What about my home? If hopefully you still have a home after disaster, those kinds of things. So there's sort of these two scenarios that you have to work through. Now, what I'm giving you here in this picture of a cash flow is a summarized version of a cash flow. Behind this, there's quite a bit of detail that has a list of all of the items that go into generating your income, like where your income is coming from, and the list of all your living expenses. And when you're looking through for both the business and the personal side of your cash flow, and paying attention to this ending cash balance. When you see this line, this is your bank account. So when it goes negative, that means you literally are out of money and you are overdrawn. The questions that you have to ask yourself: what can I cut, temporarily or permanently? Is there a way to generate more income? And where's that income going to come from? And if you were already having difficulty meeting your monthly obligations, what are you going to do now? And are there temporary measures that you can use to generate income? You, or if you have a partner, can they, help generate additional income, or do they have a source? So this is where you have to start really thinking through how you're going to sort of make your new situation work in your financial picture and bringing those together. The other thing is, although in my example, I showed you just 1 year, likely your cash flow planning might need to be for more than a year, because the recovery time from a disaster may be more than a year. I mean, I've heard estimates as long, sometimes 3 to 5 years, that it may take to fully recover from a disaster. So then you may find yourself having to do several financial models, or extending a financial model out for a long period of time, until you're at the point where you've either rebuilt and resume normal operations. The other thing is, normal operations after a disaster may not be the same as normal operations before the disaster. So that's something else that you may be faced with, in terms of, like, how does this disaster now affect, what life looks like and what my business looks like. And we'll get into this in the next section, but we'll talk. You also need to think about, in addition to the income that you generate yourself, there's going to be hopefully proceeds from insurance that you've been carrying, government programs, loans, and then savings if you were able to have savings. So how do you assess where you are financially? So for your business, just talking about just the business side, hopefully you have been maintaining accounting records. And the first thing that you should do is pull your balance sheet and determine what's your net worth. So in accounting, typically your net worth, the value of your business on the balance sheet, is shown in the equity section of your balance sheet. But there are other areas where you can look to see what your net worth is and what assets that you have, because after a disaster or some sort of crisis, what you're looking for is money, quite frankly. And you're looking for, what assets do I have that I can convert as quickly as I need to convert them to cash to help me with my recovery. So if I were looking at my balance sheet, the first thing I would look at is, number one, you're going to have the cash. The cash section of your balance sheet literally is the cash in the bank account. Then you're going to have a section that has the investments. Maybe you have been able to make some long-term investments. Maybe you're a person that likes to invest in, like, the stock market. Maybe you've been putting money in some sort of IRA or something like that, and there's money that's sitting there that you can access. But the other thing that's on your balance sheet are your assets. So as you've been running your business and you've been accumulating and building your business, you've been buying or creating assets that have value, that should already be properly identified and measured and accounted for on your balance sheet. If that's not happening, and it has not happened, assessment of where you stand is going to be really difficult. And even worst case scenario is, say there was a disaster on your farm, say it was a wildfire on your farm, and you lost everything and you never maintained your balance sheet. Now, where are the records of the assets that you lost, which you're going to need when you start to file an insurance claim, and or you're trying to make access of some of the government programs that pays for you to be able to repurchase and get back on your feet. So that shows you the importance of making sure that you have your accounting in order and up to date, where you can find out, what are the assets that I was holding in my business? What did I lose? And if you didn't lose them, can I convert any of these to cash by selling them? Because maybe you're in a scenario where, in the new form of your business, you can resume, but maybe in a scaled down manner. Maybe you can operate at a smaller level. Maybe you had 3 tractors and now you only need 2. So there's you can take one of the tractors and sell it, right? But how do you know what the value of that tractor is if you don't have some sort of balance sheet asset inventory of that? Then the other thing is, you can leverage assets to take on debt. You can use assets when you go to get loans, if that is an option for you. You can have your balance sheet or some sort of asset inventory to take on debt. If you go to get a loan, a lender will do a similar review of your assets and your balance sheet to see if there are things that they could use for collateral. Are there questions? I just saw something possibly pop up in the chat.
It was just a shout out for the Exhilarator.
Oh, yes, yes. In the Exhilarator, we go through all of this. So thank you for that, Katie. So let's see. In debt, like in looking at debt, the other thing you're going to face with is your credit and being able to qualify for a loan, because maybe that's an option that you choose. And there are favorable lending programs available, sponsored by the government, low interest programs that allows business owners, particularly in ag, to get access to capital to get back up and running. A lender is going to look at both your business and your personal credit scores to assess your risk. You should know that even if you are trying to get a business loan, particularly after a disaster, don't be surprised by that. So just want you to know that they may not use one or the other depending on how strong your business credit looks. They may be able to rely on just your business credit, but just don't be surprised if they look at your personal credit as well. They will validate the income that you say that you're going to be able to generate to repay a loan with any sort of historical records and this plan that you put together on your cash flow budget. Because remember, in that cash flow budget, what I showed was you have to map out what are your income sources and what do those look like. So that's your plan of how am I now going to generate income to not only take care of myself personally, but to repay a loan if I get a loan. What matters most here is documentation. And I'm going to repeat this quite often as we go through the content today, because what you need, no matter what option you choose, you need records of what you've lost. What are your intentions for rebuilding and sustaining your home life during the rebuild? And then you have to prove through some sort of plan that you put on paper your ability of how you're going to repay the debt and how you're going to continue to live. So you need on paper a plan, and your cash flow allows you to map out and sit with a lender or sit with someone who has possibly some funding available for you to show them what your plan is. I did talk about your net worth calculation. So if you wanted to look at what is the value of your business and you have a clean balance sheet and you want to know what is my net worth on paper, right? Because that also will determine, that really is important in lending. Here's the actual formula. Step 1, the value of your current asset, the things that you own, and include in that the cash, the value of your investment accounts, your retirement accounts, the value in any real property. Add that together. Step 2, add in the value of your current liabilities, what you owe. So including your mortgages, your credit cards, your vehicle loans, your personal loans, taxes. Even, unfortunately, even if you have a disaster, these things don't automatically go away. There are methods in which they can go away because you've now possibly lost them. But if you didn't lose them, say you had a vehicle loan and nothing happened to the vehicle, but you've lost everything else, you still have a vehicle loan hanging over your heads. So that you still need to deal with that, right? Step 3, take the assets, subtract what the liabilities, and that is your net worth. So take what you own less what you owe, and that is the net worth. Now that the lenders will take a look at that. And so I'm going to say this again. it's better to have your balance sheet up to date and clean, as clean as possible before the disaster than trying to reconstruct this after the disaster. Okay, so now let's talk about recovery resources. So recovery resources kind of fall into these 4 buckets. So you have sort of the government and public programs that you can access through the USDA, FEMA, the Red Cross, Salvation Army, for example. Then you're going to have another bucket where there's private insurance that you've been paying into to cover you in case of a disaster or loss. Then there's possibly some savings, a savings account where you've been able to like tuck away some money. Maybe you've been tucking away, maybe you have specific savings for disasters. Maybe you just have general savings, but it is a resource. And then another resource, very important, is family and friends, is sort of the community. That's another resource that you can tap into to get assistance as you're moving through disaster recovery. Under the government and public programs, there's sort of these 4 buckets. And crop insurance, NAP insurance, farm loans, and tax provisions. In part 1 of this series, we did a full presentation on this. There are many programs and they have varied qualifying criteria depending on the nature of the loss and what you lost. And you can access it's called Disaster Financial Preparedness for Farmers. So if you talk with Katie, she can point you to where that program is. And there's a ton of detail. And I think also a handout that might be available to give you a snapshot of those programs. But some key things to know about government programs, things like NAP crop insurance have to be purchased before you put the plants in the ground. So if you if you do your planting and you did not buy the crop insurance before that, and then you have a disaster, NAP insurance coverage is not available to you. The other thing that you are always going to need is some sort of you need identification, validating who you are, including your tax ID numbers and the things that you've owned. You're going to need recently filed tax returns so that they can get an assessment and assess the value of the loss in your business and what you were historically earning. If you have not kept copies of your tax returns, you can get them from the IRS. And there's a form you can file. I believe the number is form 4506, something like that, where you can get an old copy of your tax return. They need to understand who you are in terms of your farm training and your experience and what expertise you're bringing to your business to help support the idea that giving you the funds to rebuild is a smart idea because you have the knowledge and expertise to make that work. Income statements, personal and business, generally 3 years, generally. You're going to need to have personal and business income statements, some sort of records of your production history, generally over 3 years. What has the farm generally been producing? You need the list of your property, whether it was owned or leased, including any deeds, particularly if there was a loss, a complete loss, you need that. Your projected income and expense worksheet, including the cash flow. Your insurance documentation showing the type of insurance and the coverages you had available, descriptions of the damage and the type of disaster that you experienced. Sometimes when you go to get a loan or assistance from the government, they may require that you've already tried to get commercial banking assistance as a part of that program. And if you were denied, some sort of certification from the lender that you were denied. But you do need quite a bit of documentation for government programs, including, generally around who you are, your ownership, validating that you owned it, and validating the value of the assets that you lost, and even the business that you've now potentially have lost. Under private insurance, note number one, and very important, file a claim even if your home or property, like say it was a wildfire, file a claim anyway, because sometimes the wildfires or some other disaster has causes consequential damages that may be covered, right? So you may not necessarily, for some reason, maybe you are denied a claim for loss on a wildfire, but maybe that wildfire and then the winds that happened after the wildfire blew a lot of ash and smoke and soot across your crops, and now you've lost your crops, and maybe that is covered. So file a claim anyway. Don't just decide for yourself. If you are experiencing expenses for additional living expenses, save those receipts because you can possibly make a claim for those. Make temporary repairs if you're in sort of in the resilient, especially if you're in the resilience or the temporary, retreating phase. Those expenses you may be able to claim reimbursement for, but of course only if it's safe. Don't make any extensive repairs that are beyond what is necessary for you to continue to live, because you don't want to do anything that might impede on or ruin your insurance claim. Because if you've been paying for insurance, you want to make sure you get out of insurance everything you can get. So don't do too much is my note on insurance. Just do what is reasonable and necessary and safe. And then you absolutely want to make sure that you contact your insurance company as soon as possible as you're making these decisions around, your incurring additional living expenses or making temporary repairs, and what is covered and what isn't covered. When you contact your insurance company, here's some questions you should ask. Is the damage covered under the terms of your policy? What is the window to file a claim? This is a really critical question. Contacting your insurance agent is not the same as filing a claim. So you may need to actually submit something in writing, or there is some sort of process that the insurance company has that you need to do in order to file a claim. And if you miss the window, you could miss out on the opportunity of taking advantage of the insurance. These terms are spelled out in your policy. So read your policy when you get your policy, but also contact the agent and make sure that you know what that window is and what that process is. Is there deductible on your policy? Make sure you understand that. You're going to need to plan for that. So in your planning, before the disaster happens, if you know that there is a probability that you're going to have a loss, and I think most of us can sort of know that, especially in ag, you at some point something's going to happen. Is there deductible on your policy? A deductible is the amount that you have to pay before the insurance starts paying. So what's your plan for saving that deductible? Understanding what is the claims process and how long does it take? And then how does the insurance company handle repairs? So these are the questions you should be asking your insurance agent or the insurance company as you're navigating through this. Not a bad idea to ask these questions and write yourself notes before the disaster happens, so that you are prepared, and keep these in some sort of notebook or however you do that, so that you can access that after the event happens. In sort of the claims adjusting process, you will deal with the claims adjuster. The claims adjuster is the person who works for the insurance company that will come out and assess and validate the value of your loss, and ultimately helps determine how much you're going to get in recovery. You may receive forms in advance of the adjuster's visit to document the loss. They may send you something if they can. Remember I talked about a communication plan, right? So maybe your communication plan is I know I can move out of the area where I may have access to internet, and someone can always access me through email, just as an option. So that, just think through, in addition to like, what is your communication plan, being able for people to be able to send you forms and other things that you may need to sign. Maybe you're in a situation where they can send you things and you can't travel out. So just think through, maybe the roads are down and you can't drive out and they can't drive in, but they need you to fill out a form. Possible, right? Your inventory, preparing inventory of your damage or the loss. Photos, videos all help in expediting your claim. You may need also some sort of specific inspections to assess your damage, like an electrical assessment. These assessments might be covered by your policy. You should ask that question to make sure you understand. And when they settle the claim, they may assess the damage and say, okay, the value of your loss is $50,000. Here's a check, and you go on about your business. Or your claim may be, I don't want to check, I want to rebuild. And so then you work with your company and sort of go through their process using some of their contractors, and they can do a direct bill. So you can sort of stay out of the movement of money back and forth. So that's, you should ask the question about how the claim is handled. Sometimes they give you a choice, and just pick which one is best for you. And you absolutely want to make sure that you keep a copy of any and all documents that are passing back and forth between you and your insurance company, and notes of all conversations of what is being represented, because the claims adjuster and the insurance agent are representatives of the insurance company, and they have to hold true to what they are telling you as well. How much will you receive really depends. There's no clear answer. It depends on the level and type of coverage. Again, to sort of highlight the Resilierator, we go through a pretty deep dive on this in that program, discussing insurance and how to determine how much insurance you should purchase. There could be policy limits that apply that may limit how much your recovery will be. You may have a deductible, as I mentioned, and you need to figure this deductible into your cash flow planning to make sure that you have money for that. So if you don't have insurance, or you're not sure if insurance is a good idea, here's my plug for insurance. Think about insurance premiums as a savings account to mitigate disasters, right? So if you have $100,000 insurance policy and then you have $100,000 loss, think about, if you were saving that on your own, how long would it take you to save $100,000? Probably a much longer than it would take for you to pay insurance premiums and to sort of accumulate that same level of coverage for the lower cost of an insurance premium. So that's just a way to think about insurance if you're at all on the fence about whether or not insurance is a good idea. Savings. So this is a tough one.
But no, do we want to pause really quick? Or does anyone have questions specifically about insurance before we move forward? It's pretty quiet. So it's a pretty overwhelming topic, so just wanted to check in.
Okay.
All right, sounds like people. All right, go ahead.
Okay. Savings. Okay, think realistically. What is the reality of you being able to save everything you need to sustain yourself and your family after a disaster? Chances are pretty difficult to do that for most folks, pretty difficult. So chances are you're going to need some savings, but you also are going to have to make access to other programs like the government programs that I talked about. This is where FEMA, the programs available through FEMA resources, where they help you with housing and shelter, things like that after a disaster will come into play. So that's just when you're thinking about savings, if savings is your plan, just be realistic. Even if say you are making savings are a part of your plan, but you get into it and you look through the year and you're like, well, I'm actually not able to save as much as I thought I was going to be able to save. So maybe I need to change my plan. That's perfectly acceptable and smart to do. So my note around savings is it can and possibly should be a part of your plan. The reality is that's an extremely difficult thing to do. There's no shame in that being difficult, but just know that you need to make sure that you are prepared to access the other options that are available to you, like insurance, government programs, and family, friends, and community. So where family, friends, and community come in, number one, there are federal and state disaster programs focused on community needs. These tend to be related to infrastructure and conservation, right? Those programs and those funds, you should just know that those funds are given to community townships and local government and agencies that focus on reestablishing infrastructure for communities. So those funds are available. Those are not for you personally. They are for they benefit you, but they're not directly for you. Sometimes in a disaster, working together with your local community might be a need or even a requirement. And advanced planning is key. So talk to, realistically, friends, family, community, neighbors, neighboring farmers around, if there is a disaster, are there ways that we can work together to help each other, to make sure that we are looking out for each other's safety, to not only inform each other, but maybe help with transportation? Maybe you get together with the community and you figure out a plan that works really well for sheltering livestock, or transporting, sheltering livestock out of the area, or sheltering together in some sort of manner. You just need to have the conversation. And if there is a cost associated with that, talk about that in advance as well and plan it out. So think it through is the note here. Your plans related to shelter, food, safety for both short-term and long-term situations. And I know, Katie, you and I had talked about a community resource tool.
Yeah, I'll try to drop that in, or I will follow up with that after the webinar.
Great.
And let me know when you want to, there's a question on insurance when you want to circle back.
Oh, let's do it now.
Okay, great. Kolbush asked, if I lease land, does the insurance fall under the landowner's insurance responsibility?
It depends on the responsibilities. In most cases, it depends on your lease. In most cases, it's the insurance primarily is going to sit with the owner. However, you and the owner should make sure that you're both talking to your insurance companies to see who appropriately should be covering that insurance. And sometimes it may be covered by the owner, and they pass the cost of that insurance on to you through the rent. So there's no necessarily clear answer. It just sort of depends on what you're leasing and what the agreement is. But generally, with the owner, but you may have some responsibility. Generally, like if it's land, that is with the owner, but the things on the land are with you. Like, right, if you're just leasing the land and your equipment is on the land, and the owner has allowed you to build a barn on the land, the owner may not have the insurance coverage for your barn on their land. So these are conversations that you just need to make sure that you're having with the owner and the insurance companies to make sure it's clear.
Thanks, Winona, and Amber shared. Dan Macon of UCCE said that this is an issue for contract grazers in particular, which I think Kolbush is related to. Megan, you're unmuted. Were you hoping to ask a question?
No, that was a mistake. Apologies.
No worries. Just checking. All
All
right, go
right.
ahead, Winona.
Okay, so now let's recap. So I sort of tried to pull together the main points here. Number one, have a plan for evacuation, shelter, food, medical needs, health and safety first. So once you have that taken care of, and now you're looking at recovery, you will need lots of documentation and records. Your ability to access any of the options that I discussed here today really depends on your ability to prove what you are asserting in terms of what you owned and what you lost. Think about your bookkeeping being up to date, particularly your asset inventory, insurance, same thing. You need to be able to prove what you lost, records, receipts, pictures, video. Additionally, when it comes to insurance, make sure that your insurance is covering, that the insurance company knows everything that is covering. You can't have like added all of this equipment onto your property and then have a disaster and lost it and then go to the insurance company and say, oh, but I had added, $100,000 of this property or equipment on my farm and now I've lost it and I want coverage. Well, you weren't covered for all of that. So make sure in looking at your insurance that it is constantly being updated to reflect the proper amount of coverage and that the insurance company understands fully what is being covered. And then make sure you have contact information for local resources. So your local FSA office is a great resource that can help you access the government programs that are going to be available for you. And then also think about record keeping, because if the records were in a small shed that you were using in an office that was on your farm and the shed burns down, what do you do? So where do you have backup? If your backup is, I'm going to make a hard copy and I'm going to put it in the safe deposit box down at the bank, but now the bank is closed and the bank was also lost, or you can't get to the bank because the roads are closed. You've got records, but you can't get them. So maybe something like some sort of cloud-based storage system where you put it in the cloud, simply scanning it in and emailing it to yourself puts records in the cloud. If you have an accounting system and you're using like QuickBooks Online, that's cloud-based. So if you're putting your receipts and copies of all your documents inside of your accounting system, anyone who has access to the internet can log in and get your records for you if you can't. So just some ways to think about in your planning, how am I going to access what I need? Financial planning is key. Cash flow budgeting, hopefully in advance, is important. Being able to estimate your net worth and your ability to access capital and looking at your possible credit options for recovery. Make use of all public programs, although that may take a little bit of time because there is quite a bit of paperwork and you can get help. I do think one of the great things about a lot of the government programs is there are resources available to help you and people who it is their job to help you navigate these programs. So find out where those people are at your local FSA office, and they can also point you to other, generally they know each other, these folks, and they can point you to other people who can help you navigate the paperwork and the applications, paying attention to the deadlines. Sometimes in some of the programs, they even share the same documentation, or sometimes because you participated in one program, you automatically are sort of like enrolled in another program on some level. So, so I think that that's a really good aspect of these programs. And then also don't forget that there may be personal and infrastructure losses. So move as fast as you need to, but think carefully because some aspects of these recovery options may unfold later. So the point here is just give yourself a little bit of time to make a full assessment. Because remember, if you have some sort of disaster loss, don't underestimate the effect of trauma to yourself and your decision making. So move fast, but make sure that you are being thoughtful and careful and that you are, on the right path for yourself after you have thought everything through. And that's it.
Thank you so much, Winona. And another helpful thing we tell people with insurance is in the cloud is just to use your camera on your video or a video on your phone and just like go through your barn, go through your house, open all the drawers and just video everything so that when something does happen, you're going to have to provide, the brand, the make of every tool you own. And so you might think you remember and you might think they might just be old tools, but they add up. If a pair of Felcos costs $30 and you had just lost 4 of them, you can just extrapolate that. So just doing an inventory with your phone can be super helpful, and then it stays on the cloud. But thank you so much, Winona. That was so thorough and interesting. And I want to now invite Q&A from everybody else.